Hey everyone, so I thought I would do a bit of a critical analysis of Mohnish Pabrai's Wagons Fund. So this isn't just a critical analysis of what's inside the fund, but also how the fund works, and Mohnish Pabrai as well. He's been copping a lot of flack on Twitter. I thought I'd go through some of this and we sort of can figure out whether it's justified or not, or I'll give you a bit of my opinion too. So my biases are going to come through here a little bit. I think it's an interesting fund where you've got some interesting positions and interesting ideas, and countries like India and Turkey and the industries inside of the United States that he's invested in have some interesting characteristics. Definitely not the high-flying tech scene or anything like that. Definitely some things that are not considered attractive industries, generally speaking, by the wider public. But interesting take on these spaces. So I think the cool thing is that the trailing PE of the fund, the stuff that's in the fund right now, sits at around 8. So that compared that to like the S&P 500 at the moment, that's probably 25 plus, somewhere between 25 and 30, let's say. So the discrepancy there is very large in terms of valuations. This fund started back in September 2023, and Mohnish Pabrai, the fund itself, has underperformed quite significantly in that time. So the fund is down about 10% since it started, about 18 months ago. The S&P 500 in that period of time is up well over 30%. So the discrepancy there, at least 40, potentially 50% difference there in what you could have done by just putting your money in the S&P 500. So 18 months is probably not fair to judge somebody on that. But I'll show you a little an image on the screen right now, and if you go back through time, Mohnish Pabrai funds and his investment funds have actually not performed very well. He is a great speaker. He articulates himself very well. I think that his theses are very solid, and they seem very logical, but don't seem to have played out that well historically speaking if you look at the last 20 years. But I really want to analyze this track record a little bit closer before all the criticism comes through about he's a terrible investor, he's full of shit. If you look at this graph down the bottom here, you'll notice that the discrepancy between his performance in the S&P 500 really just started to deviate in 2019. That's when, in 2019, you'll know the S&P 500 really started to take off. I don't know whether you remember 2019, but around that time, the S&P 500 was probably still a little bit overvalued, it felt. And now it feels very overvalued. So Mohnish Pabrai is sticking to his sort of philosophy of investing in cheaper companies and cheaper investment valuations. He hasn't been able to perform. There's been a big discrepancy there. I think that's probably similar to how growth and value investing kind of philosophies have gone for the past 5 or 6 years, maybe even probably like a decade. So there's probably more of the discrepancy there, and it's more like the S&P 500 and those high-flying tech stocks have really outperformed more than anyone probably could have anticipated. So do we destroy his track record over the 20 years because of what's really happened over the last 5 or 6? Possibly. So I'll let you decide on that. But for me, I would like to think, well, the past is the past, and you've got to look at track records. I think that is really important. Developing a track record is great, but it obviously doesn't predict the future. The next 10 to 15 years could look very different to the past 10 or 15 years. And I just think that the right thing to do is to find a fundamental philosophy that you like. And Mohnish, I think, has got a fundamental philosophy that he tries to stick to. And yeah, he's setting himself up for the next 10 or 15 years, and trying to ignore the bias of what's happened in the more recent times. I think that's probably how I would sum it up. Anyway, let's dive in now to the top 10. So on the screen here is his top 10 holdings. Edelweiss out of India. Now, I'm not very familiar with this company. I'm not going to go through all these and pitch each idea to you or anything like that. Again, Mohnish Pabrai has a video out where he goes through all of this, his theses on these topics. So Edelweiss, Indian financial management and management services business. He thinks Mohnish is of the understanding that they're going to spin out some of their parts of their business, then those IPOs could be very significant, and it's his highest conviction idea. Then you've got TAV Airport Holdings out of Turkey. I'm actually kind of familiar with this company because I fly through Turkey and to the Republic of Georgia, and that's a TAV airport there. So I'm pretty familiar with how that works. And the cool thing about airports, and I like how this is a pretty significant part of the portfolio, is airports have a very weird kind of situation where, yeah, it's really expensive to build an airport, as you can possibly imagine, but it's got this government's generally only going to have one, potentially two airports for huge cities, but Tbilisi in Georgia and in Almaty in Kazakhstan and Uzbekistan and all these countries, they're going to only have going to be able to handle one international airport per major city, essentially. So you get these sort of geographic monopolies kind of playing out, and it's like a bit of a toll for airlines to fly in. So as these countries continue to sort of go from third world to developing, people are going to start traveling, and Georgia is a great case study for this, where I've really witnessed over the last 10 years the tourist market there pick up significantly, and the local population themselves become wealthier and want to travel. So all roads lead through the airport for that. So I like TAV Airport Holdings. Actually, I haven't done a deep dive into any of these significantly, except for Alpha Metallurgical Resources, which we'll talk about Alpha and Warrior Met Coal now as sort of like a combo, because they're both in this metallurgical coal industry. And met coal is quite an interesting play, because it's the core component in what's necessary to make steel. We can go through the details of different quality, high vol coal, low vol coal, and how that all works, but I won't go, it's not a chemistry lesson. But essentially, Alpha Metallurgical and Warrior Met Coal produce some of the highest quality metallurgical coal out there. It's very difficult to get metallurgical coal in terms of locations in the world. There's not too many of them, Australia being one, Russia, the States, Canada. There's a few places, but it's not there's an abundance of this metallurgical coal, and you need it to produce quality steel. And it doesn't seem like that trend is going away anytime soon. Steel is necessary for the world to grow. So as long as I feel like the world is going to continue. So yeah, you've got issues with China, for example, where China's probably not going to be building anywhere near like they had been for the last 10 or 15 years. So the demand there is probably going to slow right up, which it already has. But then you've got other countries of the world that are growing faster than average. So it generally does average out over a period of time. The steel demand of the world, it just goes in very significant cycles. And understanding these cycles is a whole other video in itself, but I actually really like the Warrior Met Coal and Alpha Metallurgical Resources play here. The cycle at the moment is pretty bleak. It looks like supply is relatively stable. Warrior is actually going to put a fair bit of new met coal into the market. They've got a Blue Creek mine that's going to come out the next, hopefully, 12 months or so for them, bringing some more supply into the market. And demand has fallen away significantly, so the prices of met coal as a commodity have really pulled back, where Alpha Metallurgical Resources for the last couple of quarters I don't think have broken even, or very, very, very small losses. And yeah, Alpha's got this amazing balance sheet and really good management, and done this for 100 years. And their cost to produce this coal is actually a little bit higher. It's higher on that cost curve, if you can imagine. And then Warrior Met Coal is very low on the cost curve. I think they're doing an amazing job from a operations point of view. Both companies are working really well from an operations point of view, and but Warrior Met Coal just don't have quite the strong balance sheet because they've been spending all this money in Blue Creek. Anyway, Warrior and Alpha, I actually like this met coal play over a medium-term time frame. I think short-term there could be some serious headwinds though. Hard to very hard to pick when cycles turn though. So interesting play there. Racist logistics, those who follow Mohnish will know more about racist than anybody. Actually, most of the holdings from here, so 5 to about 20, you can't see the whole list here, but they're all around this sort of 2 to 4% range. So I wouldn't get too worried about the rankings from racist down. But essentially they fall into a couple of other buckets, and one of the other buckets is home builders. Mohnish has a thesis on home builders in the States, and then the car dealership is another place that he's got a few bets as well. And again, thesis in his video for that. The big plays here, Edelweiss, TAV Airports, and coal, I think are probably the 3 big players, parts of this portfolio. And yeah, you got to get comfortable with those 3, I think, is the way to think about this. A little bit more on the fund itself. Yeah, September 23 was when it launched. $10 per share is what you could get when it first launched. That's what the net asset value was, essentially $10. And at the moment, it's under that number. It's about $9 or so. So performance, yeah, down about 10% compared to like the S&P at that time, like I said earlier. So significant underperformance. And yeah, Twitter is not kind to this underperformance, and atrocious numbers, and just see the amount of airtime he gets and the way he gets spoken about. He's a fraud, in my honest opinion. Could be the biggest loser in the industry, which is really saying something. Good speaker, that's all. Blocked me because I made fun of that zinc company he rode down to zero, and then pretended there was something heroic about doing that. People like him should stick to writing books and bragging about meeting Buffett, not investing. Trump announces a 25% tariff on foreign cars. This will be disastrous for car dealerships selling foreign cars. Guess what super investor has exposure to dealerships? That's correct, the cool mustache man, Pabrai. That's gonna hurt. Now, that's an interesting one. We can actually talk about the 25% tariffs on car dealerships as that's not quite as much as a personal attack as some of the other comments that we just read. But I think the 25% tariffs on foreign cars, let's see how that actually plays out. We don't know how it's going to affect things, but yeah, it probably is going to hurt car dealerships if that sticks. I don't know. Car dealerships will have to try to make this up with, I guess, with domestic cars, Asprey and AutoNation and things like that. Look, tricky one to play out. I would think that maybe the tariffs get rolled back, maybe they change with another government in the future. I don't know. Yeah, but let's assume that some of the car dealerships are gonna really look ugly over a short period of time. Yeah, that's gonna be a slight drag on the portfolio, but it is the smaller parts of the portfolio. It's not one of those big 3, like I said earlier, but it does make up some of the portfolio. So yeah, it probably is going to be a drag. I think the tariffs are going to be a drag on a lot of things actually. So home builders, their costs of materials is going to go up pretty significantly, I'd imagine. Even the met coal guys, they're going to struggle as well with Warrior, because they've still got to spend a couple $100 million in getting this new mine up and running. They've spent a lot of the capex already, but their costs are going to go up. Importing materials is just going to have to increase if tariffs are going to stick for long periods of time here. So yeah, I guess it's going to hurt a lot of businesses, and I don't think this portfolio of the Pabrai Wagons fund is going to be immune. I do like the fact that it probably, Edelweiss over in India probably has little to worry about, I would guess, and TAV Airports, again, probably little to worry about as well. They're probably going to get their fees regardless of what happens in the States. So yeah, maybe there's some diversification there by being in different countries, but maybe they're, yeah, I would imagine most things are going to struggle with significant tariffs. Another tweet that I want to address, which is, it says skim off the top and underperform. Essentially, that's what Mohnish Pabrai is doing, and that's a very anti-Charlie Munger thing to be doing. I think Charlie Munger said something like that. You want to avoid those situations, and Mohnish Pabrai is essentially charging a 1.25% fee on this mutual fund. So the question is, do you think the fund, the way it is with these investments, is going to significantly outperform your other ideas that you might potentially have? And if so, is it going to be then worth the 1.25% that you have to pay Mohnish? Now, you do have to remember mutual funds, there is a sort of like fixed costs involved with running mutual funds. These are not cheap, free things to be organizing. So if you're going to have people invest in funds like this, there are generally always going to be management fees moving forward. I know Buffett was able to do this in the past without the fees, but there's actually significant fees involved, and compared to doing this yourself, you might not be able to do it. So Interactive Brokers, the broker that I use, link in the description by the way, if you want to take it for a trial run. The Interactive Brokers has a lot of these investments that you can actually copy a lot of these, so you can get into the Met Coal space and the home builders, the car dealerships, but you'll struggle to get into the Turkey companies, India as well. So you probably can't mimic it exactly. You might have to have special privileges inside of your brokerage account. So I think, is it worth the 1.25% to get access to some of these ideas like Edelweiss and TAV and races? Possibly. The PE of the fund sitting at around 8, you might think this is actually going to outperform significantly over the next 5, 10, 20 years. And if that's the case, the 1.25% fee might actually be totally justifiable and be totally okay. So it really just depends on, a few things. How comfortable do you feel with Mohnish? Now, there's another thing here that I'm just looking literally at my screen, and he says in his PDF document about the fund that he's trying to think long term and like go long only. And the thing is with Mohnish Pabrai is that he has this there's a big criticism out there that he has all these ideas, and he talks this game about being a long-term investor and holding on to your good companies and all these things, but the churn of his portfolios are actually pretty significant. There's quite a lot of churn. My idea on that is that he's just finding better ideas, or the thesis that he invested in initially has since changed. And that's not too dissimilar to how my own portfolio works. Like, I want to hold companies for as long as possible, but sometimes the rules, the game changes. Sometimes there is a better opportunity that comes along and you want to take that opportunity. It's significantly higher expected returns than the opportunity you're currently in. So maybe that's the way investing should work anyway, until you sort of nail in these ideas that are the best of the best, and you sort of protect those and keep those in your portfolio over a long period of time. But maybe high churn isn't actually that bad until you find exactly the best of the best. I don't know, it's one way to look at it. It's kind of similar to how my portfolio works, so I actually don't mind how he runs this. I find the whole thing quite interesting. I think it's kind of cool that you can get access to India and some of these Turkish plays that I wouldn't normally be able to. And there's a little bit of attraction here at the net asset value being under the $10 per share mark that it was in the past, and with the PE potentially of only around 8. I actually think that might not be that bad of an idea, even with that 1.25%. And even though, considering his long track record of underperformance, I think we might be missing something here. I think people are going to throw Mohnish Pabrai under the bus a little bit, which is what Twitter is full of at the moment. But I think there's an opportunity to think of the ideas and the thesis and see if you might be able to say, well, look, the ideas are really solid, the theses they're really solid, follow them along with him. And since it's a reasonably diversified portfolio between sort of 15 to 20 names, I think there's worse ways to invest out there. So hope that was of interest. I'd be very interested to hear what other people think of this and whether they're on which side of the fence they're on. I think Mohnish is a bit of a polarizing figure. So I'll leave it there.